In this video, we're going to look at how the release of economic CPI data impacted the stock market, individual stocks, Forex, yields, and crypto. Let's run the numbers. Looking across the main markets, all sectors were up 0.12%. Utilities did the best, real estate did the worst. The CPI figures came out. Core CPI decreased, but overall CPI increased. We can see that the annual rate of change in the CPI is coming down. The bump in overall inflation was caused by gasoline prices coming up more than 10%. Increasing energy prices dig into profits, as well as free cash flow and earnings per share. Energy prices have come up recently because of the war in Ukraine, as well as OPEC Plus countries putting out decreased supply into the markets. US oil has been on a rampage and is currently $88.83. When we look at the CTKS method markup, which shows us where the institutions and algorithms are buying, we can see that there's a smart money support level at 88.21 and down further at 88.09. There's overhead resistance at 89.23 and 89.46. These lines have been formed with a markup since 1861. The next FOMC meeting is in around 6 days, and there's currently a 97% probability that the Fed doesn't increase the federal funds rate. This has caused the US 2-year yield to drop, as well as the US 10-year yield to drop as well. We're looking through the Tier 1, Tier 2 and Tier 3 charts because all markets are intercorrelated and interconnected. The drop-off in the US 2-year yield, the US 10-year yield, is causing the fear gauge of the main market, the VIX, to fall. We can see risk-on activity starting to re-enter the market with an increase in junk bonds. The major indices, the S&P 500, has remained largely unchanged. The increase in the US 2-year, the US 10-year, the DXY and US oil were putting a lot of negative momentum inside the major indices, and we can see the Nasdaq has started to turn the corner. The DXY is currently trading at 104.6970. The CTKS method is unique in that it marks up all of price history with a very specific methodology. We can see that the DXY came into smart money sell resistance at that 104.8643 mark. There was a further higher smart money resistance level at 104.8741. These structural resistance lines and structural support lines are very, very powerful. If we can't get through structural resistance, we're going back to structural support. With three-dimensional risk management, we always understand the price is moving in a wave. It's always going down and up, then down. So we look at price action from that perspective. But what we can see with negative momentum starting to develop on the US 2-year, the US 10-year yields, and the Fed not stepping in and raising interest rates by the probabilities from the FedWatch tool, we would imagine and predict that there's more probability of the DXY coming down as rates come down. The US 2 and the US 10-year come down as well. The biggest problem to watch will be oil and energy. Please let me know in the comments, do you think that the DXY is going to revisit these structural support levels at 104.5334, down lower at 104.5168, and down lower as well again at 104.4962. When we get a confluence of these levels, and they're called Stanfield levels, when we get a confluence of these SLs, it makes it more probabilistic the price will bounce up. The difference between this methodology and many methodologies used, all of price action is marked up, and it's done in a very standards-based process. There is the probability that the ECB will start to increase its interest rates. That would put positive momentum on the euro-dollar and, of course, push negative momentum on the DXY. Turning to where smart money is buying and selling, and this is really important to know. The euro is currently 107.37. We have smart money support at 107.27 and a stronger one down at 107.25. We have smart money resistance, and the euro dollar has had trouble getting through this at 107.44, and you can see up higher that is quite substantial, and you've seen previously it's also been rejected at 107.60. If the ECB increases interest rates, we would expect that 744 level to be taken out and a push up to this smart money sell area at 760. We would expect to see dollar yen decrease as the DXY decreases and the euro dollar increases. Increasing yields and the potential for the federal funds rate to remain higher for longer is pushing commodities down. Therefore, it's very important to understand where the structural levels of support and resistance are inside the market. Here we can see those particular levels marked up since 1802. We can see that silver tried to get above this smart money sell level at 22,982 and was unsuccessful. We've seen it come up through that level before and then reach the higher level of structural resistance at 23,024. That's what makes these lines so incredibly important. They're not marked up from recent indicative price. They're marked up since 1802. And what we can see, there are multiple structural levels of support below silver. This will act as a safety net. You can see that gold came down pretty hard and has been consolidating. You may not know why. It's all to do with the structure, the smart money buy and sell areas. We can see that gold was caught by a structural buy area at 1910 and 98. And a further one below at 1909 and 62. There's also a minor one at 1910 and 36. This acts as a safety net to catch price, and you can see it caught price very, very well. This is why marking up charts, in this case from 1833, is a very, very valuable thing to do. When we look at copper, copper has also come into a structural support area. At 378.40, that's a very strong level, but you can also see the structural resistance levels above it were rejected. Price is always moving SL to SL, and SL is called a Stanfield level, and that just signifies that the chart has been marked up with the CTKS method, which is the world's most powerful smart money buy and sell level detection system. Looking across the main markets, we can see that the Apple release was not well received. Oracle, having sold off horrendously, bounced back, as did Microsoft, Nvidia, and others. Throughout the session, Apple sold down. Investors and traders didn't think that the tiny USB-C port was a huge deal. That was largely because Apple is avoiding expected price hikes on the iPhone 15 family, which may curb revenue growth in the coming year. We can see Apple has been coming down, but the key is, where are the structural levels inside Apple? There was a structural sell area at that 178.20 mark. It was a buy area and it had a marginally smaller one, but still important one at 178.28. Then the price came down. The lower SLs always act as safety nets. So if price is coming down, if it can't get above an SL, it's going down to the next one. If it can't get above, it's coming back to the next one. If it can't get above, it's coming back to the next one. It's a very simple way to look at a very complicated market. Yesterday, when we did the show, Apple was trading at 176.31. It was trying to make its way up to this smart money sell area, this resistance level of 178.20. It didn't make it. What does that mean? It was coming back to test the 175.28. If it couldn't get above, it was going to the one below at 173.97. Tesla is strategically placed to take advantage of the changes in the economic system, such as electric vehicles and charging stations. In yesterday's video, we were about here in Tesla's structure. We can see that Tesla performed quite well. It performed well because there were structural reasons for it to perform well. We can see that 266.24 structural support level and the 265.17 structural support, but we also note that the structural resistance level at 273.62 stopped Tesla from going above. If it can't get above, it's going below, but if it does get above, it's going to the next one. Microsoft has been doing very well, and it's uniquely placed for the AI revolution that is also coming. But where is smart money buying and selling? When we look above Microsoft's current price, $335.96, we can see multiple levels of smart money resistance, $338.07, slightly above $338.19, and above that. When you get a clustering of these SLs, it makes it harder because the sellers are in control at those levels. We can also see that this particular smart money buy area at $334.77 has been holding up very, very well. It's caught price. When price tried to reach this smart money resistance level, it was pushed back by the sellers, but it found support here. Can you imagine trading and investing in Microsoft without knowing where smart money is buying or selling? Nvidia also performed well, but it always comes down to CTKS structure, where smart money buys and sells. One thing to bear in mind, more and more funding is coming into the stock market. That will eventually pull crypto up. Unfortunately, crypto has been hit recently by FTX news. The court has recently approved the FTX liquidation plan. In reading the associated court documentation, Bitcoin and Ethereum are being subjected to hedging arrangements to avoid any price fluctuations and instability. Much of the value of Solana is currently locked. Therefore, it cannot be sold. Unfortunately, a lot of the crypto market is driven by fear, especially retail fear. People talk about diamond hands, but the first thing people do when they see a red day is throw their hands up and just leave the market. That's very unfortunate because the professionals, the institutional buyers and the smart money buyers, they're all there waiting to get a discount. What really matters is not the short-term price fluctuation, but the use, versatility and use cases of the various cryptos. Are they worthwhile to get into in the first place? If the answer is yes, be in them. If the answer is no, get out. In bankruptcy proceedings, it's very important that assets are sold for the maximum amount possible. A lot of people inside crypto think that the FTX administrators will simply just dump everything in a fire sale. This is not the way the bankruptcy proceedings unfold. The focus is to minimize the risk of price volatility. Those orders actually allow staking agreements and also hedging. Looking through the main market, we can see basically that the crypto market has come up. Bitcoin is up 1.34%. In the past 24 hours, we saw a bit of a spike up in Bitcoin's price. Just take notice of that spike. Look at the spike playing out on all the other alts. What about this one? There wasn't much of a spike in USDC, that stablecoin. That's not by surprise. Stablecoins are meant to be a dollar. The greatest gainers in the past 24 hours, top 100, HBAR, Rune, IOTA, TON, Comp, Woo, Solana, Maker, and Mana. The greatest losers, past 24 hours, top 100, Astar, Flare, Clayton, XTC, BSV, Leo, and 3 stablecoins. Across the past 24 hours, there's been 66 million in total liquidations. 46 million has been short. And when you get a short liquidation, these little boxes turn red. When you get a long liquidation, it turns green. And we can see the majority of the 24, the 12 and the 4 hour have been short liquidations. Now we're starting to see long liquidations. Currently in the crypto market, we can see Bitcoin has a positive percentage, but a lot of the alts have come down. This is because we're witnessing a flight to safety. When trading or investing inside the crypto market, it's very important to look at more than just the chart that you trade or invest in. This is what professionals do. First, a professional will look at total crypto market cap. they must know the institutional and algorithmic buy and sell levels. What we can see, the current crypto market cap is currently 1.026 trillion. It's literally at a smart money sell level. We have a minor one above at 1.028 trillion, and we have a support level, a smart money buy level here at 1.019 trillion. To know this is to know the fingerprint of the chart that you would be trading inside crypto. For example, at times like this, if we don't manage to get above this smart money sell level, we're coming back to this smart money buy level. We would expect the price to come back around this particular area, potentially below it. If we're looking at a breakout from here, we would expect price to come up to this initial level. Look at these particular spikes that have occurred previously. And if we can turn this into support, wow, that's going to be fantastic. I mentioned it's vital to look at two charts. The second chart is of course Bitcoin, and no alt can escape Bitcoin's gravity. We need to look at the structural levels on Bitcoin to understand, are we at a resistance level? And we are. That resistance is playing out at 26,297. We're nearly getting above it. If we do so, the next level is 26,332 and a level above at 26,564. These levels have been formed in accordance with standards and marking up Bitcoin since 2009. These lines may just look like regular lines, but they're called SLs or Stanfield levels because they're not regular. There's a very specific standards-based process to actually mark these lines up. To create those SLs on charts requires Level 1 standard certification and Level 2 standard certification. Level 1 standard certification gives you the foundations, and there are quite a few lessons that need to be known and understood to start the process. Level 2 standard certification is where all the magic happens. That's where you draw out the SLs, and more importantly, where you understand them. A lot of people think that it's very easy to draw out an SL. You can see that there is a lot more to it. It's quite complex and it's time consuming. That's why the service was created, to save you an enormous amount of time. Not only that, but to make sure that you get lines in accordance with the standards of the highest precision and accuracy. Level 1 gives you the foundations, and then you build on all of those foundations with Level 2 standard certification. Ethereum is gathering positive price momentum. Solana is as well. You can see Bitcoin Cash is a little bit weaker. BNB is starting to recover. ADA is also starting to recover. XRP is starting to show strength. We're seeing a lot of strength developing in Litecoin, and Litecoin at times like this can be very light. We can see that Doge is largely caught in a range. You can also see that whilst total crypto market cap over the same period of time has been coming up, and also Bitcoin has been coming up as well. Some of these price patterns differ, and that's largely because of CTKS structure. When we mark up through Level 1 and Level 2 standard certification, and that's exactly how these lines are drawn. This is not an automated process. What we see is that there was a substantial amount of smart money resistance above Bitcoin Cash. That has been suppressing Bitcoin Cash's upward momentum. We refer to this rule as CTKS structure overrides. The CTKS method service on ctksmethod.org literally saves you hundreds of hours per month in marking up your charts with the CTKS method. It also has 27 videos and 27 TradingView indicators that you can overlay on your charts. Please note that the foundation membership is coming to a close. Many people, when the Crypto Trading KS Masterclass was brought out, there was a foundation membership period, and many people lost that opportunity because they acted too late. Unfortunately, when something is closed, I do not reopen it. I'm letting you know because if you're interested, I don't want you to miss out. Many of the Masterclass students missed out and they are very upset about it, so I want to make sure you get the opportunity if you want it. If you have an active membership to the CTKS method service, your price will not change. It will remain engraved in stone so long as you keep your membership current. That's the entire purpose of the foundation membership. Learning and applying and understanding the CTKS method is an utter game changer. To secure your foundation membership, please pop across to ctksmethod.org. Learning the technical levels is incredibly important, as is having a positive excellence mindset. If you would like to understand how all of the world's markets work in concert with each other, to learn to trade inside the most volatile market on the planet with confidence, Perperatum is kindly offering a CTKS partial masterclass scholarship. The focus of the masterclass is to do knowledge transfer, and that's why it was brought into existence. And if you pop across to cryptotechnicalanalysis.org, this website here, you can read all about the masterclass, and the ambassadors can help you out as well. If you have a look at the testimonial section, and you can just read through there at your own leisure, you can see that the CTKS method and what we do is very, very strongly endorsed by so many people. If you would like to apply for the partial scholarship, the link is in the description of this video. The CTKS method service was created to save you huge amounts of time, and because you've stuck to the end, I'm going to give you the smart money buy and sell levels on Solana. We can see there's a smart money resistance level at 1938. We're also literally smack bang on the 1883 smart money buy area for Solana. Solana is currently 1885. There's a slightly stronger buy area at 1847, and then down just a little bit further at 1812. There's another structural buy level. One thing to always bear in mind, what Bitcoin and total crypto market cap do, all of the alts do. Financial markets can be very stressful, therefore it's important that we focus on learning. As part of our creed as a global family, we either win or learn and never blame. Price is always moving in a wave. Therefore, it's easy to buy and sell at the wrong times. That's why it's critically important to look at objective dynamic market structure through the CTKS method. It tells you where the institutions, where the algorithms are buying and selling. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.